Hey everyone, and welcome to Earnings Cheat Sheet for Friday, August 9th. It's Alexis, Garcia, and Ed Carson here. And as always, we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So Ed, earnings season trudging along here as we have some pretty interesting action in the market.
Yeah, and it's interesting, even though earnings season is well underway, it's still surprises, still stocks that are making enormous moves on earnings. Do want to take a look at a few names: Walmart, On Holding, and Sea Limited, sort of three consumer plays.
All right, well, let's start with Walmart. The retailer is scheduled to report Q2 earnings on Thursday, August 15th. Earnings are expected to climb 7% to 65 cents per share, and revenue is expected to rise 4% to 168.56 billion. And here's why we're watching Walmart. We'll want to see if the retail giant can maintain traffic momentum, and we'll be looking out for any comments on consumer spending. So Ed, Walmart here, one of the nation's largest employers, so big bellwether for the economy. And last earnings beat earnings and revenue estimates in Q1 and really reported impressive e-commerce growth over 20%. So what are your thoughts here with Walmart as we head into this earnings?
Yeah, I mean, when we're a little more concerned about the economy, staples like Walmart, people still need to shop. And in fact, we saw in the last quarter that people were moving down to Walmart. They were making comments. So, its earnings growth is not amazing, but it still is pretty stable. The stock has been doing pretty well. So it'll be interesting to see if they say like they're still seeing traffic. Are they still seeing sort of moderate and middle class folks moving down to Walmart? Or what the state of the consumer is in general, because that'll be important for retailers and especially for discount retailers. But I think with everybody sort of nervous about the economy, people want to hear what Walmart has to say.
All right, well, let's take a look at the chart then, Ed. And as we can see here, had a nice gap up after last earnings, really moved powerfully out of this double bottom base. Had a pretty nice run, hit this high here of 71.33. And as we've seen over the last few weeks, really pulling back and now decisively below that 50-day line. So what are your thoughts here on the technical action?
Yeah, I mean, obviously that last earnings report, 22% earnings growth, which for them was pretty impressive. Big change from the single digit growth. It was a couple quarters of acceleration. So that was important. And so, yes, it's come up a fair amount. As you see, even with the stock falling, the relative strength line really hasn't fallen at all in this time. So it's been trending higher, again, reflecting that a lot of other parts of the market had much more significant drops. I think one question for the stock is that, let's say the market takes off again. Will Walmart lag again? I mean, it may not fall. It doesn't necessarily. There's been plenty of times when the stock has risen, but the RS line has lagged because hot AI stocks are just racing past it. So that's just something to keep in mind. I mean, you could argue that if this one could come back above the 50-day line, the 10-week line, that it could be buyable. So if you did that on earnings, it'd be the first sort of real test of that area, or you could wait to see if it forges a new base. But again, if the market really improves, this may not be the leader that people want to spend much time with.
All right, well, definitely one to keep an eye on as we head into earnings next week. And let's now look at On Holding. The athletic footwear company is scheduled to report Q2 earnings on Tuesday, August 13th. Earnings are expected to surge 260% to 18 cents per share, while revenue is expected to climb 30% to 658 million. And here's why we're watching On Holding. We'll want to see if the shoemaker can keep expanding operating margins, and we'll also be paying attention to what executives have to say about inventory management, which could also impact those margins. So Ed, last quarter On Holding cleared forecast by a wide margin. A lot of that had to do with their direct-to-consumer sales. Those jumped almost 50% year over year. And earlier this month, later in June, I don't even know what day it is anymore, William Blair analyst really upgraded On's stock here, mentioning that they had a cleaner inventory position compared to some of their rivals. So what are your thoughts here with On heading into Q2 earnings?
Yeah, On has On is like there's a lot of tennis shoes, with the Roger Federer connection there. This is a company that seems to like one of those folks who wants to serve 140-mile aces. It's either gonna be an ace or it's gonna go right into the net because it's just so strong. The earnings and the earnings reactions are just all over the place at times. So that is something. It's not a steady eddy where you can say, okay, this is going to deliver this and this kind of situation quarter after quarter. But sales growth I think is supposed to increase again. Again, sometimes currency switches have an impact on that, but that would be important to see that momentum there. Some of the other shoe companies have not done well. Obviously, Nike hasn't done very well, but even Deckers, which has related shoes, with the Hoka. So can this one stand out? That would be the issue here. Keep that sales growth, keep that, and avoid the discounting. If those inventories can stay lean, that probably means they can continue to sell full price. So it'll be very important to see if this is one of the select names that consumers are still really willing to pay a lot for.
Right. And I see what you did there with the tennis puns, Ed. And let's take a look at the chart then, because as you mentioned, last earnings had a nice move here, but then the prior earnings, not so nice move. But, we saw this breakout. It, basically fell back below that buy point earlier this week, but it's really trying to hold here at this 21-day line, but still trading below the key moving average of the 50-day line.
Yeah, it did sort of have a cup with handle base. Now I guess you could argue this is a double bottom base. And we're not seeing it because it's not high enough. It needs to get a little higher before it'll even register. We're not sure. So that could be something where it's forming that base, but it just isn't there yet. The relative strength line has at least improved in the past few weeks. So when it first came down to the old buy point, that RS line was really coming down. And even though it hasn't made a lot of progress on overall since then, the RS line has improved. Again, reflection of the weaker market. It's supposed to be, this one could have big gains, but boy, this could also have big drops. You could also see whipsaw action. A couple quarters ago, you talked about that huge loss, but it came back that day, and then by the next day, it was about even. I mean, it's just a hard one to handle. It'd be very hard to be holding this one without a big cushion, because this one really could move 20% either way. And there isn't, you see that group 151 for apparel shoes. That's well down from where it was a month or two ago.
All right. Well, we will keep an eye on this one, Ed. And let's go to the next name, which is Sea Limited, which reports earnings on Tuesday, August 13th. And the Asian tech company is expected to see Q2 earnings fall 60% to 34 cents per share. And analysts expect revenue to climb 20% to 3.73 billion. And here's why we're watching Sea Limited. We'll want to pay attention to Shopee, which is their largest business segment. And we want to see if that unit can continue sales growth. We'll also want to see how the company is handling increased competition from the likes of Temu, and if that's resulting in increased costs like marketing. So Ed, later in June, JP Morgan analysts downgraded this stock thanks to this increased competition environment. And like we said, that Shopee really is the largest business, and it contributed pretty well over the last couple quarters. We've seen accelerating sales growth. But what are your thoughts here with Sea Limited?
Well, Sea Limited is supposed to return to profit. So while it's down year over year, it's after some losses. So that's a positive. It has two main things: the Shopee e-commerce unit, and then sort of a gaming entertainment unit. So it's sort of two very disparate things there. As you're right, it competes in the e-commerce against Temu, against TikTok, in a lot of these big markets like Indonesia. So that's a real issue. So this will also be important to see. It'll be a little bit of a gauge for Pinduoduo, and not Pinduoduo, PDD Holdings, which owns Pinduoduo and Temu. And PDD also gets Alibaba and JD. So you'll get a good idea of how PDD's big markets might be handling it. But this is a company that can go on massive runs. It's had tremendous sales growth in the past. That growth has slowed a little bit. The earnings are supposed to ramp up again after some tough times. It's supposed to be these next 2 years, a lot of strong earnings. So that's been one reason why it's picked up. But it is definitely one that it can be quite volatile in terms of stock performance.
All right, well, let's look at the chart then, Ed, because yes, we can definitely see this volatility, especially recently. But as you mentioned, had a nice run earlier in the year, pulled back to that 50-day line, went on another run, and it's uh, been moving downward over the last,
Pretty much.
if I can nicely put that. But yeah, really hit these highs here around the 76 price point and has really fallen off those highs and is well below the 50-day line and even coming close here this week to that 200-day line.
Yeah, this stock needs a lot of work. And this is also, we've seen a lot of stocks that broke through the 50-day line. And, sometimes they bounce back, but obviously the market wasn't, cooperating. But this is why we talk about that being a sell signal, decisive breaks of that line being a sell signal, because yes, it can come back, but then it can also do this. And you just have to think about that. This had a nice gain either from the lows or even from that little base around, say, around 60, had nice gains, and then, gave up a fair amount of that. It could still come back. It'll be interesting to see how, what they have to say about guidance and what it means for some of the other Asian e-commerce giants. But, this one needs repair work. It's one to watch because, if you go to a monthly chart, you can see just why growth investors may still have. This goes on mammoth runs and mammoth declines. And the growth may be slowing, and so it may not ever have those kind of swings again, but it certainly has a history where it can make very big moves, and you want to be on the upside and step aside on the downside.
All right, well, those were some of the few bigger ones on our radar, but let's take a look at a few more, shall we, Ed? Starting with Home Depot, another big retailer reporting next week. And this one in consolidation, official buy point of 396.87, and really trying to hold this 50-day line here. So what are your thoughts with Home Depot?
Yeah, I mean, it's struggled. You can look at the earnings and sales. That's been falling. I mean, it may start to improve a little bit. You can see it's supposed to be flat for the year and then up a little bit. It just hasn't grown that much. And, you have to think there's a lot of, if you're going to play housing, there seems to be a lot of other housing things you could play, like the actual home builders are doing better. The RS line has been lagging for a while. So, I mean, it's one to watch because it's an economic bellwether. It'll tell you some things about construction and remodeling. But it doesn't seem like a leader in its segment.
All right. Well, one to watch, maybe not one to buy. But let's take a look at another retailer. That's Ross. They're also reporting next week on August 15th. And this one attempted a breakout here on July 12th out of this cup with handle base. And again, really just faded off that pivot point and is now trying to hold above this 200-day line.
Yeah, this one struggled. The RS line hasn't fallen apart too much, but in bad markets, relative strength can be still being absolute losers. And this wasn't really strong; it just hasn't been that weak. Some of the other stocks, in this group, its competitors have done a little better. So it'll be interesting to see for the off-price group like TJX and Burlington. But yeah, along with Walmart, want to see how some of these names, TGX is trying to hold, it didn't come back. It's holding most of the gains from that run and then trying to hold the 50-day line. So that'll be coming the following week, and Burlington the same way, BURL. So these are the off-price chains. And so Ross will be important to let you know about that. And along with Walmart, give you a sense about how the, discount retail space is doing. But Ross is not probably the leader. Again, another one that you could probably find better merchandise in that sector.
All right. Well, as you mentioned, an important indicator maybe to watch for some upcoming earnings. But let's move on to Applied Materials. The semiconductor equipment manufacturing has earnings next week, also on August 15th. And Ed, taking a look at the chart, again, kind of a similar story we've seen, had this breakout back here in May and hit this high of 255.89 and has really fallen off and is right at that 200-day line.
Yeah, I mean, obviously AI, anything with chips and AI has really fallen apart. That fall through the 50-day line was pretty clear sell signal there, dropping really sharply through there and basically back to the buy point or so, or close to it. So, you would have wanted to get out if you were buying anytime recently. Yeah, this one needs repair work. I mean, if it jumped up, it would look weird. straight up. It wouldn't look normal. It needs time. And it seems like it was never one of the super leaders in the chip group. I mean, so it's fine, but it's not one of the very most important stocks. So again, but it's a lot of the others have reported, so we'll get one more month of data. I mean, so it'll be nice to see the July data on this report.
All right, well, let's take a look at John Deere then. They report next week as well. And this one, Ed, seems like it's kind of been moving sideways a bit here for the better part of the year, and now really just falling below, but trying to come off these lows here from this week.
Yeah, this is one that just hasn't been doing very well. There may be farm equipment. I think demand may be off. You can see the sales and earnings have fallen recently. They're going to keep falling. There's better things in sort of machinery that you could be buying. Not that necessarily doing that great, but this is not a lagging stock and a lagging group, so it would just be one you'd probably pass for a while.
All right, well, let's take a look at a couple of China stocks, shall we? Starting with Alibaba. They also have earnings next week, and this one forming consolidation, an official buy point of 90.46. Really coming up, though, taking that 50-day line this week, Ed, and looks like it's trying to maybe build the right side of this base here. So what are your thoughts with Alibaba and just China stocks in general as we head into next week?
I mean, this is trying to come back. I suppose you could argue that, if it got above 81 on earnings, after earnings, that you could use that as an early entry. But this has been lagging for quite a while. The earnings aren't that great. It seems like there's a lot of other things you could buy, even just especially PDD, which will be reporting the following week. And again, I said it also is a rival to C Limited outside of China. That one has been doing better. Not great, but that has a better record. So there's a lot of risk with China. Consumer spending has been weak there. So it's a tough road for Alibaba. And it just seems like thing that you probably could find other things that are doing better.
All right, well, speaking of other things, let's take a look at JD.com, which also reports next week. And again, we saw hitting these highs here in May, and this one has just drifted lower since. This week it looks like it's trying to make a comeback, retake that 21-day line, but not really looking like one we maybe want to be buying right now, Ed.
Yeah, I said you should pass on BABA, but BABA looks better than JD right now. I mean, the fundamentals are a little better maybe on JD recently, but the stock has been even worse lately.
All right, well, let's hop to another place in the globe then, Ed. Let's head to Brazil with the banking platform New Holdings. And this one's kind of been on a wild ride recently, broke out here of this flat base, 1249 buy point, hit this high of 1364. And again, as we've seen with so many of these stocks the last couple of weeks, as the market's been having some turbulence, this faded, actually kind of fell below the 200-day line in intraday trading here on August 5th. But really, the last few days has really made a powerful move up, and maybe we'll take that 50-day line.
I mean, it could do that, but it would be pretty straight up V. For all the mess in that prior base, if you go to a weekly, it was relatively tight. I mean, there was some wild action day to day, but you could say ultimately it was pretty tight on a weekly basis. Ultimately, it was sort of holding the 50-day, 10-week line for the most part. It did seem like it was finally moving out. And it's done that in the past where it sort of trades around, and then finally moves and look like, aha, here we go. Now it's going to go on a big run. So disappointed to see that come down. And that is really a big drop. And it does show you how important the market is. And to a lot of, to stocks, especially thinner stocks, overseas stocks where people may not have as much conviction in it. Actually, Warren Buffett owns a stake in this as far as I know, but just a mammoth swing over the past couple of weeks. And that's just really hard to deal with. And one to watch because it has had a nice trajectory, but it doesn't seem like it would be actionable anytime soon.
All right, well, let's wrap things up with Cardinal Health, which reports on August 14th. And I'll jump back over to the daily here, but we can see in consolidation with an official 116.04 buy point and, trying to hold above this 50-day line.
Yeah, and it looked for a while earlier this week, like it might be making a move, and you're thinking, okay, here we go, defensive growth. This is exactly, a lot of medicals are doing well. This is not done well today. Group peer McKesson, MCK, and like on this, like that fell apart on because it had weak sales. It had a lot of other good things, but the sales were terrible. So you think it's nice and safe. Nothing is necessarily safe on that. That's a little bit wrong there, but it wasn't good on sales. It didn't have that big of a drop on sales, but it had a drop, and so that came off. That didn't help Cardinal Health. Cardinal wasn't leading like these others. It looked like maybe it was going to join it, but this week has shown that, again, just because you can pin a label defensive growth to a thing and say, defensive growth should do well here, and a lot are doing well in this market. Doesn't mean all of them are, and so this is a little bit of a cautionary tale on that front.
All right, Ed. Well, thank you so much for your insights today, as always. And that wraps it up for this edition of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Quorum. That goes live after the closing bell. Thanks so much for watching, and we'll see you all next week.